Welcome to the Deep Dive. Today we're digging into Alster Inc's Q2 2025 earnings call. We'll pull out the crucial details, what really matters for the company's path forward.
Yeah, this call was definitely interesting. It wasn't just about the numbers, it was about how they're positioning LiDAR, kind of pushing the boundaries beyond just cars.
Exactly. It's this whole physical AI thing they keep talking about. We'll unpack the financials, sure, but really get into that strategy and what it could mean.
Right. If you're trying to figure out what's really driving Alster, this call gave a lot of clues.
Okay, let's jump straight into the headline numbers then. Q2 2025, pretty solid quarter, wouldn't you say? Beat expectations.
Oh, definitely. Non-GAAP EPS came in at negative $0.38. The consensus was looking for negative $0.45. So decent beat there.
A significant beat, yeah. And that's the non-GAAP number, so like a cleaner look at operations.
Exactly. And revenue. $35.05 million. Again, ahead of the street, which was around, $33.8 million?
Yeah, just under $34 million. So comfortably ahead. And that's, 30% growth year over year?
30% year over year. And 7% quarter over quarter. Although if you adjust for that patent royalty thing in Q1...
Right, that skewed Q1 a bit.
Yeah, adjust for that, and the sequential growth is actually more like 13%, so strong momentum.
Okay, and what really caught my eye was the gross margin. GAAP margin hit 35%. That's up a lot, 1,100 basis points year over year.
Huge jump. And 400 basis points quarter over quarter. The non-GAAP number was even better, around 52%.
52% non-GAAP gross margin. That's pretty healthy. We also saw record sensor shipments, right? 5,500.
Yep, record 5,500 sensors shipped shows the demand is definitely there.
And how's the bottom line looking in terms of cash burn?
Making progress there, too. Adjusted EBITDA loss narrowed to negative $6 million. That's $5 million better than last year, $2 million better than last quarter.
So improvement. And the balance sheet?
Still strong. About $229 million in cash and equivalents, and importantly, no debt. Zero debt.
No debt. That's always good to see. Okay, so the numbers look good. Markets seem to like it.
Yeah, definitely a positive reaction.
So let's unpack the why behind these numbers. Management really hammered this physical AI strategy.
It sounds
ambitious. More than just a buzzword.
I think so, yeah. It's their core narrative now. It's basically about using their digital LiDAR plus software analytics plus their new silicon.
Okay.
To enable smart autonomy in, the real physical world, like factories, warehouses, city streets, not just cars.
So industrial logistics, smart infrastructure, that's where they're seeing the pull.
Exactly. That's where the strong demand is coming from. It's a very conscious shift, a diversification away from waiting on, say, mass market autonomous cars.
And are they actually closing deals, moving beyond pilots?
That was another key point. These land and expand deals, they gave a great example. A pilot with a Fortune 500 tech company.
Okay.
Turned into a multi-million-dollar global deal, putting OS dome sensors in over 500 of their retail stores.
500 stores. Wow. Across how many countries?
More than 24 countries, using it for operational analytics. Pretty powerful stuff.
That really highlights the shift, doesn't it? From selling a sensor to selling an intelligent solution for, real world business problems.
Absolutely. And they make sure to mention this is the 10th quarter in a row they've met or beat their guidance, building that track record.
10 quarters. That builds confidence, definitely. And this ties into the margins too, right? The software piece.
Right. Platforms like Alster Gemini and Blue City, that software attachment is key to driving those higher non-GAAP margins and potential recurring revenue.
Speaking of Blue City, the traffic management solution, any highlights there?
Yeah, a couple of nice wins. They're deploying Rev7 sensors in Blue City in a FIFA World Cup host city, dozens of sites for traffic management.
World Cup scale.
And expanding in Utah with the DOT. Almost 100 intersections getting Blue City there. Plus, their partnership network for Blue City now covers 39 states, so good traction.
And then there was the defense news that sounds pretty big. The OS1 sensor getting Blue UAS certified by the DoD.
Yeah, that's a major validation. First and only 3D LiDAR on the Blue UAS list.
What does that actually do for them?
It basically unlocks a huge amount of potential government and defense business. It means the DoD trusts the tech, its security, its performance, builds on work they're already doing with the Navy, NASA.
Right.
And they mentioned a new pilot for perimeter security at a U.S. Army base, too. So opens doors. Big ones.
Okay, and looking ahead, product-wise, L4 and Kronos silicon, What's the significance there?
Yeah, L4 and Kronos, this is really about the next generation. Kronos is the custom chip for their solid-state digital flash LiDAR, the DF line.
Solid state. Okay, so smaller, cheaper.
Exactly. Smaller, less power, lower cost, better performance. The idea is these innovations could more than double their addressable market, push LiDAR into places it couldn't go before.
Double the TAM.
Yeah.
That's ambitious. So how does this all translate into guidance? What are they telling the street for Q3?
Q3 revenue guidance is $35 million to $38 million. That's actually slightly ahead of consensus, so positive signal there.
And longer term.
They reiterated their framework, 30-50% annual revenue growth, maintaining gross margins, mid-30s to 40% annually.
Okay.
And critically, keeping operating expenses flat or even below Q3 2023 levels. So disciplined growth towards profitability.
What about automotive? It used to be the main story for LiDAR.
Still their second biggest vertical in Q2,
Oh,
but
shit.
they're realistic, right? Predicting mass adoption timelines for consumer ADAS is tricky, very long cycles.
Yeah, notoriously difficult.
So they have the products ready for L2 plus AL3 when the OEMs are ready. But importantly, their long-term plan doesn't depend on it hitting some specific near-term date. It's not the core dependency anymore.
Which really underlines that diversification strategy. Smart move. Okay, so stepping back, looking at this from an investor angle, what's the big picture takeaway?
I think the main takeaway is that this physical AI strategy, this pivot, it seems to be working. The market's buying into LiDAR for industry, for smart cities, not just cars.
Right, it feels more tangible now.
And the record shipments, the pilot conversions, it suggests the market's maturing and they're grabbing share. That land and expand isn't just talk.
And the margins.
Yeah.
Even backing out that one-time tax thing.
Yeah, even adjusting for that, the underlying improvement is there. Operational efficiency, better product mix. It supports their long-term margin targets. Seems sustainable.
That Blue UAS certification feels like a really significant de-risking event, too. Opens up a whole new, stable market.
Huge catalyst. Validates the tech for a really demanding customer, the DoD. And it helps balance out reliance on other sectors.
Plus 10 straight quarters of beating guidance.
Yeah.
Management's executing.
Exactly. That consistency builds trust. And having nearly $230 million in cash with no debt gives them a lot of breathing room for R&D, for Kronos, L4, keeps the innovation engine running.
Which they need to stay ahead, obviously.
Absolutely.
All right, let's switch gears slightly. This is where we get speculative. Remember, this is absolutely not financial advice, just a thought experiment.
Understood. Purely hypothetical.
Given the execution, the strategy validation, the potential of Kronos, what if things really click?
Well, you'd need a few things to line up, right?
Wow.
They keep beating and raising. Kronos successfully launches and opens up those new markets quickly.
Right.
Maybe they land another couple of really big FIFA World Cup scale smart city deals, and the defense side continues to ramp up.
If all that happens, could we see a major re-rating of the stock?
It's plausible. You could argue that if they cement themselves as the leader in this broader physical AI space, the market might start valuing them very differently.
So for someone looking to play that kind of upside, maybe, thinking about long-term, out-of-the-money call options.
Again, purely hypothetical.
Curse.
But yeah, you could construct a scenario, maybe strikes way up there, like $45, $50, with an expiration maybe 12, 18 months out.
Capturing maybe a few more earnings cycles, the potential Kronos ramp.
Exactly. It's aggressive high beta for sure. But the idea is you're leveraging the possibility of sustained execution leading to that fundamental re-rating powered by the new tech cycle.
Interesting thought experiment.
Yeah.
Okay, wrapping things up, what's the bottom line here from Q2?
I mean, Alster looks like a company firing on quite a few cylinders. They've got a clear strategy with physical AI. They're executing on it, winning key deals, especially in industrial and infrastructure.
The financials are improving, margins are expanding, the balance sheet is solid.
And that defense certification is a really big stamp of approval. Plus, the next-gen tech with Kronos looks promising. Lots of positive momentum.
Seems like they're well positioned, but obviously execution remains key, especially bringing those new chips to market effectively.
No doubt. The commitment to profitability while growing is also crucial. Investors will be watching that closely.
So plenty to think about there.
Yeah.
Remember, again, this was our deep dive, our interpretation, not financial advice. Definitely dig deeper yourself. What aspects of this broader LiDAR application story resonate most with you? Something to consider.
Thanks for tuning into the deep dive. Join us next time as we unpack another company shaping the future.